Have you been watching the markets lately? It feels like a switch has been flipped. There's this huge wave of optimism hitting Wall Street, and it's got everyone asking, what in the world is going on? And more importantly, what does it mean for the US economy? Well, let's dive in and decode it.
So this is really the million-dollar question, isn't it? After so much uncertainty, investors all of a sudden seem to be in a really good mood. The question is this just a fleeting feeling, or is there something solid actually driving all of this excitement?
And I mean, we're not talking about a small blip here. The Dow Jones just rocketed up by about 400 points. That is a massive jump, the kind of move that makes everyone sit up and pay attention. It's a real signal that the mood has shifted.
And look, this wasn't just a Dow thing. The party was happening everywhere. The S&P 500, the tech-heavy NASDAQ, they all saw some pretty solid gains. That tells you the good vibes are spreading across the whole market, not just in one little corner.
Okay, so what's lighting the fire here? What's the catalyst? Well, all eyes are on one place, the Federal Reserve. So for our first section, let's try to decode what the Fed might do next.
All right, so this is where things get kind of interesting and a little counterintuitive. We've been getting economic data that's a bit, well, weaker than expected. And you'd think that would be bad news, right? Nope. For the market, it's great news. Why? Because it makes it way more likely the Fed is going to step in and cut interest rates to give the economy a little push.
And whenever you hear people talk about the Fed cutting rates, this is what they're talking about, the federal funds rate. You can think of it as the master interest rate that influences pretty much everything else, from your mortgage to your credit card. It's the Fed's biggest lever for steering the whole economy.
So let's get down to the nitty-gritty. Right now, the rate is sitting between 3.75 and 4%. The big hope, the thing that's really driving this rally, is for a cut of 1/4 of a percentage point. You'll hear this called 25 basis points. That's just Wall Street talk for you.
But here's the thing. This isn't just about one tiny cut. Investors see a potential cut this December not as a one-and-done deal, but as a beginning. It's a signal, a big flashing green light, that the Fed might be starting a whole new cycle of cuts to keep the economy humming along.
So that's the immediate picture. But what happens when you zoom out? What does all this hope and speculation mean for the economy, say, a couple of years down the road? Let's look at the outlook for 2026.
And you know what? The long-term view is looking pretty bright. Bank of America is actually predicting above consensus GDP growth for 2026. In plain English, that just means they think the economy is going to perform even better than most other experts are forecasting right now.
But it's never that simple, is it? So what's actually supposed to be powering all of this growth? And what are the speed bumps we could hit along the way? Let's break down the engines of growth and the risks. There are a couple of huge factors fueling this optimistic forecast. It really hinges on money continuing to pour into two absolutely explosive areas: artificial intelligence and, well, the entire tech sector in general. These are seen as the big engines that could really propel us forward.
But of course, it's not all clear skies ahead. The same experts are warning about some serious potential turbulence. Things like, what is the government going to do with its spending? What's happening with global trade? Just the general economic landscape is always shifting, and that could definitely shake things up.
And all of this brings us to our final and maybe most important section. It's time for a necessary dose of caution about what's actually ahead.
Because here's the real tension in all of this. While the stock market is acting like the future is incredibly bright, the actual real-world data we have right now is kind of meh. It's mixed. The facts on the ground haven't quite caught up to the feelings on Wall Street.
This chart really says it all, doesn't it? You've got market optimism way up here in the clouds, just soaring. And then you have the hard economic data, which is kind of trudging along down here on the ground. There is a very clear gap between the hope and the reality.
So, what should we all be watching in the next few weeks? These are the big ones. Upcoming reports on jobs, on inflation, and just on the economy's overall activity. These are going to be absolutely critical. This is the data the Fed is going to look at to decide whether to make the market's dreams come true or to hit the brakes.
And that really leaves us with the trillion-dollar question. Will the actual economic data get stronger and finally justify all this optimism? Or is Wall Street's big party about to get a serious reality check? Well, the next few reports will tell the tale.